been doing very well. Of course, in 2025, we traded up from 2,600 at the beginning of the year to 3,500 by around mid-April. Then we had a consolidation for 4 months, and then we broke out of that consolidation like a symmetrical triangle, which is very bullish. And I think one of the triggers was Chairman Jay Powell, Chairman of the Fed, Jay Powell's speech at Jackson Hole. He nodded that they would start cutting rates again, and surely they did in September by 25 basis points. At the same time, we're seeing Russia, China, and other BRICS countries continue to buy gold and silver. Russia and China are also building independent gold markets in moves to bypass the US dollar. And it's something that we just spoke about, right? China, again, they're challenging the gold market in London and New York. And yeah, that's not just a challenge from China. Of course, it's BRICS as well. China is leading BRICS. And the reason we cover this so much is not because we love BRICS and we love China. It's just that we want to warn people of what's going on and how it will affect their financial health. And it's already affecting because the dollar and all other fiat currencies are losing value hand over fist versus gold and silver, which is very inflationary. And have you noticed how your standard of living has dropped so much in the last few years? So, but I'm going to do something different today. I'm going to give a suggestion to the United States or to America, what it could do to fight back a bit against these forces from China and BRICS. But before we do that, I want to look at this challenge in the gold market. And it's an article from Bloomberg. It was earlier this week, September 23rd. And it says, China courts foreign gold reserves to boost global clout.
According to recent reports, the People's Bank of China is quietly encouraging friendly nations to store their sovereign gold inside China's borders. This effort, funneled through the Shanghai Gold Exchange, is designed to strengthen Beijing's control over global bullion flows. One Southeast Asian nation has reportedly shown interest, a signal that China's strategy is gaining traction. By building this new reserve hub, China is trying to replicate a centuries-old principle: those who hold the gold ultimately hold the power. It's a modern echo of Rothschild's dictum, control the money supply, and you can influence the laws themselves.
So China aims to become custodian of foreign sovereign gold reserves in a bid to strengthen its standing in the global bullion market, according to people familiar with the matter. Well, I think China understands that he who controls the gold controls the world. And it's akin to what Lord Rothschild supposedly said back in the 19th century: give me control of a country's money and I care not who writes the laws, right? So China is trying to do this on a world scale, and it is a challenge to America and the West. Anyway, let's continue. The People's Bank of China is using the Shanghai Gold Exchange to court central banks in friendly countries to buy bullion and store it within the country's borders, said the people, who spoke on condition of anonymity as the discussions aren't public. The effort has taken place over recent months and has attracted interest from at least one country in Southeast Asia, the people said. The move would enhance Beijing's role in the global financial system, furthering its goals of establishing a world that's less dependent on the dollar and Western centers like the US, the UK, and Switzerland. Countries have been snapping up gold as a hedge against mounting geopolitical risks, creating the opportunity for the PBOC to offer a haven of an asset deemed crucial as a buffer to economic shocks. The PBOC and the SGE, Shanghai Gold Exchange, didn't respond to requests for comment. Demand from central banks has been a key pillar in the precious metals' recent ascent to record highs, and the PBOC itself has been on a buying spree for 10 straight months. Markets may be speculating that China's bid to host foreign gold reserves signals a long-term push to elevate its role in the global monetary system, said Wael Makarem, financial markets strategist lead at XNES. Investors could be interpreting this as an incremental de-dollarization momentum which could support gold, he added. So before we move on to my suggestion for the United States on how to fight back against the Chinese and BRICS, I want to look at the gold market, what it's been doing in the last few months, and we're going to look at an opportunity that I think is worthwhile considering.
Central banks worldwide are increasing their gold holdings, a defensive move against geopolitical risks and financial instability. In 2025, demand has surged as gold smashed through $3,500 per ounce, a historic milestone. Analysts suggest this rush into bullion reflects an accelerating de-dollarization trend, where nations seek protection from U.S. financial dominance. With China and Russia building their own independent gold markets, the West faces a mounting challenge. This is no longer just about investment returns. Gold is re-emerging as the ultimate insurance policy against currency debasement, systemic shocks, and a world where trust in fiat money is rapidly deteriorating.
Yeah, gold has been doing very well, of course, in 2025. We traded up from 2,600 at the beginning of the year to 3,500 by around mid-April. Then we had a consolidation for 4 months, and then we broke out of that consolidation like a symmetrical triangle, which is very bullish. And I think one of the triggers was Chairman Jay Powell, Chairman of the Fed, Jay Powell's speech at Jackson Hole. He nodded that they would start cutting rates again, and surely they did in September by 25 basis points. At the same time, we're seeing Russia, China, and other BRICS countries continue to buy gold and silver. Russia and China are also building independent gold markets in moves to bypass the US dollar. And it's something that we just spoke about, right? So these changes have helped actually push gold to historic levels, breaking its 1980 inflation-adjusted high. And Goldman Sachs even named gold its highest conviction trade ever. And they're calling even for $5,000 gold by next year. And the GDX, the world's largest gold mining ETF, is up about 107% so far in 2025, compared to just 13% for the QQQ Tech Index. So with a 79% chance of another rate cut in October and 91% in December, many analysts believe this could mark the first true gold stock bull market in 20 years. So that brings me to today's video sponsor and the opportunity I told you about. It's US Gold Mining Inc. I actually profiled this company back in June. It was trading around $9.20. Right now, we're just above 12. The ticker is USGO on the NASDAQ.
Gold's meteoric rise has reshaped the investment landscape, from $2,600 in January 2025 to $3,500 by April. The metal consolidated before breaking higher again. Key catalysts included Federal Reserve rate cuts and heightened geopolitical tensions. Major institutions like Goldman Sachs now forecast $5,000 gold within the next year. Meanwhile, gold miners and ETFs are outperforming traditional stock indexes by wide margins. With the Fed expected to continue rate cuts into December, many analysts believe we are witnessing the first sustained gold bull market in 2 decades. For investors, the stakes have rarely been higher, or the opportunities more dramatic.
So, U.S. Gold Mining owns the Whistler project in Alaska, one of the largest undeveloped gold-copper projects in the region, and located near Anchorage, the state's main population center. The Whistler project mineral resource estimate comprises 294 million tons at 0.68 grams per ton gold equivalent for 6.48 million ounces gold equivalent indicated, plus 198 million tons at 0.65 grams per ton gold equivalent for 4.16 million ounces gold equivalent inferred. You should review U.S. Gold Mining's latest annual report on Form 10-K and the technical report summary incorporated in it for information on the project and the mineral resource estimate. The company went public in April 2023 at $10 per share when gold was just under $2,000 an ounce. Today, gold is way above $3,500. And yes, U.S. Gold Mining Inc. is trading just above 12, as I said earlier. U.S. Gold Mining has a quite unique ownership structure. About 78% of the shares are still held by its parent company, and another 4.5% are owned by insiders and management. In total, more than 80% of the shares are tightly held.
While China presses forward, the United States is considering how to respond. One radical yet feasible step would be to revalue its vast gold reserves, last officially adjusted in 1973. Such a move could instantly strengthen the balance sheet of the U.S. Treasury and reassert the dollar's role in global finance. Federal Reserve Research has recently explored the idea of official reserve revaluations, suggesting the concept is not far-fetched. A dramatic gold revaluation, some suggest as high as $20,000 per ounce, would not only reshape markets, but also signal that Washington is willing to defend its monetary supremacy.
The political support for Alaska's resource development is another factor. On his first day in office, President Trump issued an executive order to unleash Alaska's extraordinary resource potential, followed by another order calling for immediate measures to increase American mineral production, specifically including copper and gold. Alaska's Governor Mike Dunleavy has personally visited the Whistler project, as has U.S. Senator Lisa Murkowski. Even local leaders such as Matanuska Sustina borough mayor and borough manager have shown their support. Alaska is also moving forward with plans for a road system that would directly connect Whistler to Anchorage, making the project even more accessible. And now U.S. Gold Mining is at one of its most important moments in its history so far. The company has started its preliminary economic assessment called a PEA, which is an initial economic review of the project, with gold at more than $3,500 per ounce and copper at about $4.50 per pound. The timing could not be better. For anyone interested, please review U.S. Gold Mining's filings, including its annual report on Form 10-K and the full technical reports, which are available through sec.gov and cedarplus.ca. These documents provide all the scientific and technical details behind the Whistler resource estimates.
The contest over gold is about far more than precious metals. It's a battle for global influence. China's aggressive strategy to anchor central bank reserves within its borders could shift the balance of power away from Western institutions. Meanwhile, the U.S. still holds the largest official gold reserves in the world, a hidden weapon it may one day revalue to reassert dominance. As nations stockpile bullion and investors seek shelter, the golden age of currency competition is unfolding before our eyes. For households, this struggle directly impacts savings, investments, and the future stability of their economic lives.
I'd also like to say that I'm not a financial advisor and nothing here should be considered financial advice. This content is for educational and informational purposes only. Always do your own research and consult a licensed professional before making any financial decisions. Full disclaimers, by the way, are linked in the description below. So now let's get back to looking at how the United States could fight back the challenge from China, Russia, and BRICS. So yes, how could the U.S. fight back? Well, it's through a symbolic revaluation of the Treasury's gold holdings, and there's been a lot of debate about a gold revaluation. Even the Board of Governors of the Federal Reserve System have published an article. They published an article on August 1st by someone named Colin Weiss, and the title was Official Reserve Revaluations, the International Experience. So it's something they're considering. Yes, there's been a lot of people that some of them I've interviewed calling for $20,000 price, $40,000 even. So the last time the United States Treasury or the United States revalued the gold price, the statutory gold price, was back in 1973 from $38 to $42.22. And in 1972, they had revalued as well from 35 to 38. And so it's been at $42.22 ever since.